mode.
All right, ladies and gentlemen, hello everybody and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Just as usual, if you have a look at your webinar interface, you should be able to see that small questions box. And please, if anything is not clear during this webinar, if you have specific questions, please let me know and I'll do my best to answer those questions. And right now, I would appreciate it very much if you guys could just let me know using that questions box if you both can hear me well. And let me just change a slide here that also the screencast is working properly. All right, everybody. Thank you very much. Really appreciate it. Today's session, just like all our other webinars, is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through those risk disclaimers carefully and make sure that you're comfortable with them. Essentially, this says that trading involves risk and that you should understand those risks and the risk associated with the instruments you're using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purposes only. And that being said, let's have a look at a further risk warning, risk disclaimer, this time coming directly from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. Let's have a look at today's agenda. And yeah, our regulars know it already by heart. We want to have a look at the markets. The idea is you want to have a trading strategy when you trade those markets. And I will explain to you guys what I'm seeing on those markets and on those charts and how I approach my personal trading. And what are my trading strategies and how do I work those markets. And the good thing is the basic reasoning is the same. It doesn't matter if I want to trade it doesn't matter which market I want to trade. It doesn't matter which time frame I want to trade. And it also doesn't matter if I intend to trade to the long side or to the short side. Essentially, those strategies work in any kind of, no, they don't work in any kind of market. I want to have a trending market, but I don't care what the market is. I don't care what the time frame is. And if it's long or short, as long as the setup is there, I don't really care. So without much further ado, let's directly jump into our charts. And today I thought we could have a look at British pound against the US dollar, or as it's also referred to by currency traders, it's called cable. And if we have a look at cable here, let's just briefly start here on the higher time frames, the monthly chart where each candle represents 1 month. You can see that cable has been in a long and steady downtrend. Sure enough, the Brexit bottom didn't really help the British pound here. Market went lower. However, just recently, price recovered. This is always a judgment call. I'm looking for lows and highs in this market. And clearly, this is a high. This is another high. And this is a lower high. This was a high. And here we have a high. And again, a lower high. Lower lows and lower highs. So clearly, this is a downtrend. Now the judgment call begins. Okay, we have some lows here. Are those already lower lows, or is this just a little bit of noise here during that retracement? Right now, I would consider it to be some kind of noise. And for me here on the monthly chart, this is still a perfectly valid and intact uptrend. But however, I'm seeing those and they raise a little bit of question marks for myself. So I'm paying attention to those, but it's currently, for me, it's really just a downtrend on the monthly chart. Market has pulled back once again here into a moving average sell zone. And you can see this pattern all over the place. Market has pushed lower, it's pulling back. Where does it pull back to? It pulls back to a moving average sell zone, the area between the 10 and 20 period moving average. Then we get the next leg to the downside. and price pulls back once again. Where does it pull back to? Very close or into our moving average sell zone. That's the basic pattern that we're looking for. We always want to see the price moves away and then pulls back. And once price has pulled back, we're looking for potential trend continuation opportunities, because we think if we find a good entry when price is at those equilibrium levels, then we should have the opportunity to take a position with less risk. It's a little bit less likely the price will continue to shoot higher once price has pulled back here. However, price is already overextended from those levels here, and if we try to chase that move and went short here at the low of that move, we have all this potential here for a snapback, which of course would be hurting us if we try to chase the market here at those lows. So that's the reason why we always want to establish a position once we have pulled back to those equilibrium levels. Now, that's the monthly chart. That's the big picture. I like to have a look at that as well. However, much more actionable, and especially with regard to Nadex contracts, which are trading on the daily and shorter time frames. It's nice to know that the monthly is in a short-term downtrend. However, the bigger and the more important news that we get is if we look here at the weekly chart, and we can see that the weekly has now established a new uptrend. We can see higher lows and we can see higher highs. Higher highs, higher lows, this is clearly a new uptrend, and we can see that the 10-period moving average already has started to shift above the 20. The 50 is not yet in place for our fanning pattern, but you get the basic idea what we want to see here. Just quickly coming back here to this downtrend, you can see price has pushed lower. It pulled back and it gave us a perfectly small bearish candle sitting here directly in the sell zone. This is the type of setup that we're looking for. Same thing here for that type of candle. It's a downtrend, we're pulling back, we're getting that candle, that small bearish candle in the sell zone, and then we have a trend continuation. This is the type of pattern that I'm looking for in about 80% of my trades. Now, once again, weekly chart, we have started to shift to the upside here again, and so price has started to push higher. And if we have a look now at the daily chart, we can see on the daily chart that this now has clearly established a new uptrend. And however, we have pulled back a little bit, established a small bullish candle setting up here in the buy zone, and it went a little bit ahead, pushed a little bit further. But here you can see that we have clearly a new uptrend in the market. And also important or nice to note is if we look here at our indicators, if we look at MACD and RSI, we can see that those new higher highs in price are confirmed by our indicators also making new higher highs. Please have a look at, and let me try, I never use those sloping trend lines, so I don't know for sure how to draw them, sorry. If we compare this high here with the high that we have there, you can see clearly it's a new higher high. That line is sloping upwards. If we use that same point in time and connect those highs in MACD, you can also see that those are clearly new higher highs here in MACD as well. This is called convergence of our indicators, and the same thing, of course, is true here for RSI. This is an indication that this uptrend is really healthy and has some good strong momentum. If we saw divergence, for example, price made a new higher high, but those indicators wouldn't show us that. We saw lower highs in our indicators. That's an early warning sign. That's a sign that something might be ahead, that there isn't really that strong momentum and support coming on into the market. Something's not quite right here. And this usually is an early warning sign which keeps me out of a trade. But here on the daily chart, this looks strong, this looks nice, nothing really wrong with that kind of market and setup here. We are now trading very close here to our moving average buy zone. And if we now have a look at those lower time frames, and here we're now looking at an 8-hour chart, a 4-hour, 2-hour, a 30-minute chart, and a 15-minute chart. In a perfect world, we will also see the hourly chart here. I think this would be getting a little bit too crowded, so I omitted the hourly chart. But the big picture here is, especially if we check here, still the 8-hour chart, you can see prices pushing higher, still making higher highs. This retracement here was a little bit more pronounced than I would like to see it. And here you can start to see on the 8-hour chart this divergence of which I've just talked. We see a higher high in price. However, this higher high is not really confirmed here. This higher high here is again not confirmed here. So we have a double leg divergence already setting up here. And the same thing is true for RSI. For this high, compared to that high, we compare this value in MACD with that one, and this value in RSI with that one. And I hope you can see that clearly we have lower highs in MACD and lower highs in RSI, but we'll make new higher highs here in price. So that's the idea, that at least for a short term, there might be a little bit of correction coming in there. And we can see that this correction already had started to take place a little bit here, at least in the 15-minute chart. Short-term move here to the downside and push higher. However, this chart here is a little bit too noisy for my taste. It's not really that tradable at that point in time. And if we have a look at the Nadex contracts available for trading, we have weekly contracts, but most of those contracts actually are scheduled more around intraday expiries, rather short life cycles of those options. And for that reason, I want to come back to what I introduced to you guys already last time. And these are tick charts. What is a tick chart? Well, in a tick chart, we are looking at usually a normal chart. One candle represents all action, all trading action that has taken place within 1 hour or 1 day. For a tick chart, it's different. For a tick chart, you are not grouping those trades. You are not aggregating them by time, but rather by transactions. So if we have a 150 tick chart, this means about 150 trades are going into the formation of one candle. And once 150 transactions have taken place, the next candle starts. So those charts are much faster paced, especially in fast moving markets. Big moves in the market, then those charts usually react quite fast. I just said about 150 ticks, or round about 150 transactions. Why? We're looking at forex here. Please understand that forex is not a centralized, not an organized market. It's a pretty much an OTC market where a lot of big companies and corporations and banks trade with each other. So if I'm using a tick chart here for forex, that data is coming here from my data provider. I assume that that data is probably pretty close to what's going on in the general marketplace, but it's definitely not precise. However, if I was looking at a chart like that coming for an organized market, like the Nasdaq futures, like any futures market, like any stock market whatsoever, where all transactions are being executed at an exchange, then it's definitely just 150 transactions going into each candle. So with forex, it's a quite good approximation, I would call it. But for anything that is going and which is cleared at an exchange, it's definitely precise. So keep that in mind. Now you can see that this move here to the upside, which happened, and please don't be confused, obviously by my accent, I'm based in Germany. So if those hours are off by, round about 7 hours, don't be confused. It's my local German time. You are looking there at your charts, obviously at the precise time which you are trading. You can see that this move now has taken place for the last about 3 hours. And while this was not really that tradable on the 15-minute chart, let's have a look at what the market has been doing here. Price started to rally. And was it tradable here on the 15-minute chart? No, it wasn't. It took some time until those moving averages started to fall into place, and this hasn't happened just until recently. So usually with a move like that, you would be sitting on the sidelines and waiting for things to set up. Same thing is true during election nights, during referendum nights. I remember when the Brexit vote, the results came in, those markets moved so fast. You couldn't trade a 5-minute chart, you couldn't trade a 15-minute chart, at least not with our strategies and with my approach to trading. However, if you had switched back then in the day to a tick chart, there you got those pullbacks, and you can see we pushed higher and we pulled back. Our moving averages here have already fallen into place. We got a small bullish candle, price pushed higher. We pulled back. Where did price pull back to? We pulled back here to a moving average buy zone. It gave us it's not a small bullish candle. You see large bearish candles. Those bearish candles are becoming smaller, and now you start to see indecisive candles, and that's usually good enough for me after a move like that. If those candles are becoming indecisive, small bodies centered around the, pretty much in the center of the range of that candle, and then starting to push higher. That's a pattern you see very often, bearish candles becoming indecisive candles, turning into bullish candles, and just the other way around. And so definitely here, potential trading opportunity and setup, just setting up there. And this is something which was tradable here on the tick chart, which wouldn't have been tradable there on the, on a time-based chart, just because that move happened so fast, and you couldn't really catch up to what's been going on there. Now let's have a look. When I prepared for that session, I was hoping for another small bullish candle setting up here and price pushing higher. That's the nice and interesting thing with trading. You never know what you will get, and you will just have to see what happens there and how to react to that. Well, what can we see here on this 300 period tick chart or 300 transaction tick chart? You see, I'm using those same charts and same distances again. Remember, if I'm looking at a 15-minute chart, I want to get confirmation from a 30-minute chart. If I want to trade the 30-minute chart, I want to get confirmation from an hourly chart. So if I'm looking here for potential setup with my 150 tick chart, the confirmation should be coming from a 300 tick chart. Once again, I'm just doubling my time period or my number of transactions, my number of ticks required for that chart for a potential setup there. So what are we seeing here? Currently, not that much. We're seeing lower lows. However, this high here has been slightly a higher high than we got here. So it's a lower low, higher high. It's not really clear what's going on there. And for that reason, I'm not really that ambitious now to put on any trades here, with the market just rendering that type of setup pretty much invalid, which I had in mind. Coming back here, I want you guys also to pay note here to my pivot points on that chart. And pivot points are another form of leading indicators. What is a leading indicator? Well, a lagging indicator are my moving averages used in the conventional way. If moving average A crosses above moving average B, this triggers a buy or a sell order. Now, just see what happened. You can see that the cross happened here, for example. Now, looks perfect on a chart, doesn't it? But you wouldn't have gotten into that trade here at this price level. Let's make it larger for you guys to see this stuff better. Now, lagging indicators, here we have the cross of the blue and the red one. And so you think you would have gotten short here. No, you wouldn't. You would have gotten short here at the close of that candle. And you can see how much far away we would have been, how late that signal actually has been generated. And the next thing that happened, sure enough, we pulled back here to a moving average sell zone. And anybody who would have reacted to that signal here wouldn't have had that much of a good time, because obviously we would have been very close to selling the bottom, at least of that move. So using indicators in that conventional way, or looking here at a crossover of the signal line with the trigger line, or looking for overbought and oversold levels in RSI, it just didn't work for us back in the day. We lost money trading that way consistently. And so our founder, Nick McDonald, thought that, wait a minute, there has to be a better way to trade those markets. And sure enough, he turned to leading indicators. Now, what's a leading indicator? We know our moving average buy and sell zone. And we know where that area is. And we have an idea that if price is trading here, we're overextended from our moving average sell zone. And so we think if price pulls back to those levels, and we know where those levels are, that might be interesting. It might be better to trade there. Another leading indicator are pivot points. You can Google floor trader pivots, and it's just you need the data. If you want to have those daily pivot points, you just need the data from yesterday. You need to know where did the market trade at the close, at the high, and at the low. And that's it. That's all you need to know to calculate all the pivot points for the next day's session. And those pivot points are here on the chart. And we don't just use them based on daily data. We also use them on weekly data, on the monthly data. And I think it's always fascinating to see how price actually started to push higher and where where did this move higher actually stall? It stalled here at the daily pivot point, and it came back. And where did it find support? It found support very close to the weekly pivot point. Is this perfect? No, definitely it isn't. Is it a good addition? Is it a good tool on your workbench? Yes, absolutely. So one leading indicator using pivot points. Another leading indicator would be to use Fibonacci, for example. And I'm just putting in my Fib retracements here. And you can see this move here to the downside and coming back. Where did it come back to? It stopped right here at the 50% Fib retracement. Does it work all the time? No, sorry, it doesn't. It's working often enough and good enough for me to use those tools regularly and use them on my charts. So that's leading indicators. We know, and once I know that this move is going on here, I know where my 38, my 50, and my 61.8% retracements are. I don't have to wait for price to come back to that level to know it's trading now at the 50% retracement. I know that price has a tendency to pull back between 50 and 61.8 and give me and hit that area. And so I knew where this area, where this level would be when price just was about trading here and starting to pull back. Leading indicators, I have an idea about what the future might bring. I never know for sure, but I have an idea. So much about my failed setup here in British pound against the US dollar. And I just now want to give you guys another look here at the Nasdaq. And when we're looking at the Nasdaq, of course, I also want to show you guys some potential trades here on the Nadex platform, and show you guys how easy it is to actually raise some orders here in both directions, independent on what you think what the market might be doing. Looking at the Nasdaq, I hope you can see that this is an absolutely beautiful and astounding uptrend. The monthly chart, you see this fanning pattern here, much clearer action than what we just have seen here on the British pound against the US dollar. Weekly chart, pretty much the same thing, pulling back here to a moving average buy zone and off to the races it is. Same thing is true here on the daily chart. We had some consolidation phase here, however, then everything just pushing higher and on again. And you see that we don't get those pullbacks as deep as we want them to see into a moving average buy zone, because the market is moving too fast. And if the market is moving too fast and is not pulling back deep enough, we are usually looking here back into on lower time frames, because here on those lower time frames, you can see that we do get those pullbacks. Here on the 8-hour chart, there are our pullbacks. Very close, qualified as a trade. Candle's a little bit too large, but again, pullback here to the zone. And now, because this is just setting up so beautifully, let's have a look at what's going on here. Would this be a trigger candle here? Yes, you can think of that candle as a potential trigger candle. Is it a perfect setup? No, it isn't, because the trigger candle actually has been this one here. It's a bullish candle because price action the market rejected all this move to the downside, and it closed very near the top. Yes, it has a red body, but that red body doesn't mean a thing. This is a beautiful bullish candle, and that would have been my trigger candle. Now let's quickly jump here over to the platform. And the idea is, once again, price is pushed higher, has pulled back now to a moving average buy zone, and there might be an opportunity that price could be going higher. Do I know for sure? No, I don't know. The thing that I can be doing here is, with those types of setups, I'm speculating that I can, if all the stars aligned, if all the time frames agree, if all the setups are there, that I should be able, over a large set of trades, to win those setups more often than not. And so I would be just potentially placing that trade. Now let's have a look at what different options are there. We're looking at a 15-minute chart. With this contract here, I have 1 hour and 35 minutes left. If I'm going for the other one, I can see much faster paced. Something has to happen within the next 35 minutes. Let's have a look at both. If I think that this market might be going higher, I could be looking here, and I'm trading now an option which is a little bit in the money, because I think there's a decent chance that price doesn't get that far away, because we have just 34 minutes left in the life cycle of that option. Now, I could be trading 5 contracts here, and I'm already in my trade. Now, why 5 contracts? Not why 5. The idea here is if I'm trading 5 contracts, my potential loss was something close to 250. And this would have been quite close to about 1% of my account size. Proper risk management for my own trading, I'm always looking at trading and risking just about 1% of my account on any one given trade. So with this demo account, it's about a $25,000 account. So I'm just risking about 250 bucks per trade. And this was how I arrived at those potential 5 contracts here. Now, do I have to wait until this and to see what is the outcome of that trade? Do I have to wait those 33 minutes? No, I can actively manage that position. I can trade around that position. And if price is going my way, I can start to try to lock in some of those potential profits. And let's just try to do that. I've traded 5 contracts, and I could be thinking about scaling out of that position. And with maybe 3 contracts, I'm selling 3 contracts, and I bought those contracts at a price of 44. And so the idea is if price is pushing higher and maybe trading at around about 88, I could be closing that. I could be closing 3 and scale. Sorry, I could be selling 3 contracts, effectively scaling out of my position and making this trade pretty much unlosable. Why would it be unlosable? Well, I have already taken profit, potential profit here on 3 of those contracts if they have doubled in price. And so the money that is still at risk with those 2 contracts that remain open, that should be pretty much covered by the profits that I could have locked in if price pushed higher here towards those 88. So I'm just putting on that limit order. And you can see it's not executed. Why isn't it executed? Because it's a limit order. We are waiting here for price to actually push higher and hit our level here. Now, if you think, wait a minute, this has gone up way too fast and all this support here near our pivot points, I don't trust it. I think this will be going down, at least maybe not now, but maybe over the next few 1 hour more. We could be looking here at a different expiry cycle, which gives us about 1 hour more time. And if you think price could be going lower, you could be looking, for example, at selling one of those contracts. Now, we have a little bit more time, so this means price could be moving further away. And if we look at this pivot point here, we could be looking at a 5,666 level roundabout. So if we looked at, we don't have to go that far out even. Let's pick that one here. And yeah, just once again, I'm selling now. I'm trying here. How much money may I lose? May I risk if I want to? How much money could I lose if I just wanted to risk 1%? I'm just increasing my position size now until I see that my maximum loss is quite close to those $232, 1% of my account size. So I could be trading 26 contracts here. If this works out, if price actually starts to drop lower, which I don't think it will do, because this is the setup that I'm looking for potential long trade, but that's just me. Your assessment might be completely different. But however, if you think price could be going lower, the risk-reward rate or reward-to-risk ratio on that trade is outstanding. I'm risking 200 bucks in order to make more than 2,000 bucks. However, the market, Mr. Market tells me here with those prices, Philip, you have about a 5% probability or 7% probability that this might be working out your way. I'm just placing that trade now to show you how easy it is to trade both sides of those setups. Neither trade which I've put on is a recommendation or an endorsement in any kind of direction here. So yeah, that's it. I'm really glad that we have been able to see here this beautiful setup, and you can see prices already starting to push higher here once again. Essentially, if I had seen that setup and would have been doing that webinar right now, I'm quite likely that it's quite likely that I could have put on that trade in my own account. All right, everybody. I think that's pretty much it for today. We have covered here both directions. And once again, let's have a very brief and quick look here at our tick charts. You can see this move higher has started to what it looks like here on those tick charts. Give it a try. Give it a thing. Give it a try. Have a look at those different types of charts and how to group the data. And I think, especially if the markets are moving rapidly, that you will really appreciate having those tick charts available. And this should give you, in the end, more opportunities for your trading. All right, so let's quickly jump back here to our final slide. Yeah. Thank you very much for tuning in, everybody. As usual, that's the end for today. I hope you found today's webinar useful and you learned something new. Mavino, great question. Do you use the same ticks for all markets? I'm using those ticks and those time frames that give me good setups. I don't care what the ticks are. I want to see those pullbacks into my moving average buy or sell zone. And I'm playing with the ticks until I see what I'm looking for. That's the nice thing if you have a strategy that works on any market and on any time frame. You tweak as long as you get those perfect setups that you're looking for. All right, nothing to thank for, Mavino. Thank you much for asking that question. All right, guys, here are a million ways to be in touch with Nadex. In case if you have any questions, please let them know. And yeah, thank you very much for tuning in today. As usual, after this webinar, there should be a short survey. Any feedback that you do have for us is really appreciated. We're running those sessions for you. We want to have your feedback because this way we can help to improve our sessions and give you really the content that you came for and that you're looking for. For me, it's been a pleasure. Thank you very much for attending. And now to all of you, have a great day. Happy trading. Catch you next time. Take care. Thanks again and bye-bye.